a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
There are going to be winners and losers in the ETF area resulting from the recently announced Trump tariffs, although we don't know the details yet. But our ETF research director, Nita Mishra, is going to fill us in on some preliminary winners and losers,
Sure.
at least for what we know up to this point, right?
Correct. So, as you mentioned, last week, President Trump announced that his administration plans to impose 25% tariff on imported steel and 10% tariff on imported aluminum. So, this announcement sent stocks tumbling, and because many experts have warned that this may result in retaliatory actions by our trading partners and could ultimately lead to a trade war. And in fact, political leaders in Europe and in Canada, China, they have already said that they will take retaliatory measures if Trump imposes these tariffs. So while shares tumbled, shares of steel and aluminum users were the worst sufferers because these tariffs are going to raise prices of the metals, and ultimately automakers, industrials, heavy equipment and construction makers, they are going to suffer. And another argument against the tariff is that these sectors actually employ millions more than steel and aluminum producers, sectors that are going to benefit. And President Trump's reasoning has been that domestic steel and aluminum producers have suffered for many years because of unfair trade practices by some of our trading partners. And he has singled out China many times, and he has said that China has been overproducing steel and dumping it in overseas markets. But the problem is that U.S. steel imports, if you look at U.S. steel imports, China accounts for just 2.2% of imports. Canada, Brazil, and South Korea, they account for majority of U.S. steel imports. So that is why Speaker Paul Ryan and some other business leaders and political leaders have suggested that the administration should take a more targeted approach to punish only the abusers of the system and not have a blanket approach. So there's a lot of uncertainty as of now, as you mentioned. And then President Trump has also said that if Canada and Mexico sign a fair NAFTA agreement, then they could be exempt from tariffs. So we'll see what happens, but some of ETF, in the ETF world, there are some potential winners and losers that investors should keep in mind.
Just like with anything else.
Yes.
Right? So, all right, let's first talk about the winners.
Okay. So obviously, steel makers and aluminum makers would be big beneficiaries. So ETFs that are focused on metals, mining, and steel would be beneficiaries. They would profit from these measures. Investors could look at the industrial sector. I'm sorry. I don't have it open here. One of the ETFs that could be a big winners is the SPDR S&P Metals and Mining ETF with the ticker XME. And if you go to their website through the quote page on Zacks.com, it's one of the very popular ETFs in the segment. And you can see that steel accounts for more than 50% of sector allocation, and aluminum accounts for more than 11%. So that is why the ETF could be a big beneficiary of these tariffs. Now, another ETF that would probably come to investor mind, many investors would think of the steel ETF, that steel ETF could be a big beneficiary. But the problem is that there is only one pure play steel ETF. It is VanEck Vector Steel ETF with the ticker SLX. It tracks, but the problem is that it tracks global companies. It has a global focus. If you go to SLX website, you can see the sector allocation and top holdings, and United States accounts for a little more than 37% of this ETF's assets. Other countries like Brazil, Netherlands, UK, they also get a lot of allocation. So while US steel makers are going to benefit, maybe steel makers in Brazil and other countries are going to suffer. So I think this ETF is not a good play on these tariffs that investors should keep in mind.
All right, and what about the losers?
So obviously, as I mentioned, steel and aluminum users would lose from these tariffs. So one ETF that could be a loser is the Spider Industrial ETF with the ticker XLI. Now, if you go to the quote page, and from there you can go to the website, the external website of XLI, and you can look at the holdings and sector allocation. And if you look at sector allocation, you will see that, one second, aerospace and defense companies account for about 29% of sector exposure, asset allocation. Machineries and industrial conglomerates account for about 18% and 15% respectively. Now all these industries are big users of these metals, and they would lose if these tariffs are implemented.
And it probably, like with anything else, be spillover into other industries also,
Sure.
besides what we've talked about here,
Right.
once the details are known.
Once we know the details. And another ETF which probably investors think that since automakers use a lot of steels, so they would also suffer. And again, like the steel ETF that I mentioned earlier, the problem is that there is only one pure play auto ETF. It has the ticker CARZ. So if you go to their website through the quote page on Zacks.com, you can again look at holdings. So because this focuses on global auto industry, Japan, which is a leader in automaking, accounts for more than 35% of assets, and United States accounts for less than 20%. So because these tariffs would hurt US automakers the most, then again, this ETF would not be a good play on tariffs.
Sure.
So this is what investors should keep in mind.
All right. As we speak, do you own any of these?
I do not.
All right. Thanks for that. Sure you'll be keeping your eye on what happens in this area.
Sure.
In the meantime, if you want information on other types of ETFs, all you need to do is go to the ETF section of Zacks.com. And to get there, just go to the home page, Zacks.com, use the Funds tab in the top toolbar, and it will help you get to that ETF section. With Nina, I'm Terry Ruffalo.